The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawkbox Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. The Japanese Prime Minister Sanae Takaichi romps to victory in an election landslide, paving the way for major fiscal spending and driving the Nikkei and bond yields higher.
The Dow closes above 50,000 for the first time ever as hard-hit tech and software stocks lead an equity market rebound.
Unicredit raises its profit outlook for the current year after beating net profit expectations in the fourth quarter. Speaking exclusively to CNBC, CEO Andrea Orcel opens the door to more deal-making.
Europe requires more M&A, especially in every market, but especially cross-border. And we have more optionality than everybody else. We're present in 13 markets, which means 13 markets of optionality.
Last week on the markets, this week we're back with election news, big news out of Japan, with the Prime Minister Sanae Takaichi leading her ruling Democratic Party to a supermajority in the 465-seat lower house, claiming 316 seats according to NHK. The election victory of just over a two-thirds majority will enable the LDP to override any veto on legislation by the upper house, where it remains in the minority. Now, despite projections showing she can rule without a coalition partner, Takaichi said she was open to collaboration.
Even in the current situation, flexibility is my strong point. So if there are good proposals from opposition parties, I will take them seriously. But since opposition parties do not search for funding sources themselves, I will carefully consider not only the policies, but also the funding needed to implement them.
The projected two-thirds supermajority for the LDP has seen Japan's Nikkei 225 cross 57,000 points for the first time. Markets have warmly welcomed Takaichi's economic policies in the first few months of her premiership, which are largely seen as a growth-focused continuation of Abenomics, having introduced a stimulus package last year to help households with the cost of living. And yet, and I'm delighted to speak to Lisa Kim for the first time, who joins us with more. Lisa, I just said the markets have been broadly positive, but is there a warning sign in the rising yields in the 10-year paper, the JGBs, that actually say the financing of her plans, there could be some question marks over? Good morning to you.
Good morning, Steve. So you're absolutely right, but I want to start off by touching on the market reaction and what this means for Japanese policy. So the ruling bloc, as you mentioned, it looks likely to clinch an overwhelming majority in the more powerful lower house. And the Japan's cost of living crisis was front and center in this election. Based on government data that we got earlier Asia morning, Japan's inflation-adjusted wages decreased every month last year. Also, rice prices jumped 67% last year from a year ago, and coffee bean prices jumped 40%. So this is why the Prime Minister has promised to cut the consumption tax on food for a given period of time, which will likely cost around 6% of that country's annual tax revenue. But for now, we don't have clarity as to how she intends to fund those cuts. But what she has said, though, is that she does not intend to issue more bonds. And yesterday, in her post-election comments, she emphasized her commitment to fiscal sustainability. For now, election results, as you mentioned, will make it much easier for the Prime Minister to get her budgets passed and for her to pursue her expansionary policies. In fact, a budget can still take effect if it passes a lower house, even if the other upper house were to reject it. The initial market reaction to the election result was a half Takaichi trade with stronger equities as expected. affected. Both the Nikkei 225 and the broader Topix index closed at all-time highs. Some of the biggest beneficiaries in the Takaichi trade in the stocks space was defense sector, which jumped. Some of the names in that area jumped 7% today. And of course, Takaichi is a national security hawk who wants to lift some of those export restrictions in that industry. And also one of the first things that she did when she came to office last year was pledge to increase the country's defense spending to 2% of GDP. But the unexpected part was a stronger currency. We had expected the currency to depreciate to the dollar, but that certainly was not the case because a top currency diplomat Mimura warned this morning that he's closely watching FX moves with a high sense of urgency.
Lisa, a great roundup and so many touch points there around the market reaction to FX and defense. And I want to come back in on geopolitics because there is a wash-up today about how Japan wants to be perceived in Asia, whether it's a counterweight to China, closer relationships with the United States. How do we think about the role that Japan will play here ahead of a summit between the new leader and the US president next month?
Yeah, Karen, that's a really good question. As you know, Takaichi has a firm stance on China. I mean, she ruffled feathers with that country when she told the Japanese parliament last year that her country will not hesitate to take action if Taiwan were to be attacked. And of course, China struck back with warning its citizens to refrain from traveling to and studying in that country. And China has, of course, also imposed export restrictions on some of those rare earth minerals. And as for the U.S., Takaichi is one of the reasons that Takaichi was so popular in this election was because her perceived ability to foster close ties with the American leader. And of course, we saw President Trump endorse her even before the election results were announced.
Lisa, loving your coverage. Thank you very much indeed for joining us on Squawk Box this morning. Very interesting looking at the latest news out in the UK banking sector. NatWest Group is buying Evelyn Partners for £2.7 billion. I know a little bit about Evelyn Partners. It's a banking and wealth management business. I've had, full disclosure, at one point I had a small relationship with them as well. The transaction, though, according to NatWest, accelerates the delivery of NatWest Group's strategy, further diversifying income by increasing fee income, 20% circa pre-revenue synergies, etc., etc. Paul Thwaite, the CEO of NatWest, is saying bringing together these two leading business creates a unique opportunity to provide financial planning, savings and investment services to more people. It's a lot of HNWs as well in there as well, so it'll be really interesting. So NatWest, big push, the headline is big push into private wealth management as well. There you go. Okay. Ben.
Now, here in the UK, Prime Minister Keir Starmer's Chief of Staff has resigned amid mounting pressure over his role in appointing Lord Mandelson as the UK ambassador to the United States. Morgan McSweeney said that while he did not oversee the vetting of Mandelson, he wanted to take full responsibility in advising Keir Starmer to appoint him. Analysts have also warned of the possible economic fallout if a leadership challenge is mounted against Keir Starmer. RSM says the biggest risk to gilt yields is the potential for a challenge, with a new leader raising the risks of less fiscal discipline or more borrowing. That is a view shared by Nomura, which says that Starmer could come under more pressure if Labour loses an upcoming by-election in Manchester after he'd blocked a potential leadership rival, that's Andy Burnham, from standing. Well, Ritika joins us with more now. Ritika, this resignation of the Chief of Staff, the name won't necessarily be one familiar in households up and down the country, let alone abroad, but a powerful figure. And I suppose the hope is that this takes some of the heat away from the Prime Minister.
Absolutely.
But only for so long.
Yeah, I mean, maybe this just bides him a little bit of time is more of the expectation when it comes to this. I mean, there was some inevitability that this was going to happen, that McSweeney would have to go, because there have been calls from Labour MPs for him to stand down. There's been a lot of pressure building. McSweeney is clearly taking the fall here for the Prime Minister, as you mentioned there, in this kind of crisis surrounding him. It's clear that somebody needed to take the responsibility. So McSweeney has done that, says says that he did advise the Prime Minister. It was interesting, though, that he said that he didn't do the vetting of Mandelson here. So again, he's resigning here to kind of save the Prime Minister, take some heat from those backbenchers who are really out for kind of some bloodlust here, and they're furious in the hope that it will kind of bide him some time. Now, of course, the far left of the party, they've actually wanted to get rid of McSweeney for some time. He's blamed in a part for actually kind of moving the party away from its traditional kind of far left roots as they've seen the threat from reform really build up. The big question, though, is if this is going to be enough for Starmer to actually retain his leadership. Again, maybe it him some time, but many have been saying that McSweeney should have gone a while ago, that Keir Starmer is actually jumping late to this. And also there's been a lot of questions around Keir Starmer's judgment, because ultimately, even if McSweeney advised him, the buck stops at the Prime Minister. It's going to be especially lonely at the top now for Keir Starmer, now that McSweeney, his right-hand man, has gone from the picture. That he's been with him from the beginning. He's been the brains behind the operation, really led him to the victory in the election in 2024. So it's going to be tougher for Keir Starmer now, and of course coming at a really difficult time for him when he's doing really badly in the polls. We know his public and private calls for not just McSweeney to step down, but of course Keir Starmer's leadership very much in question. Yes,
there's a lot in there. I'm just going to quibble with one thing you said. I don't believe that many in the Labour Party will say they have far left roots as well. I think the Blairites might say that's not the case as well. But I mean, you're absolutely right. They got rid of Corbyn and they shifted the party to the centre left from more of a leftist stance. Couldn't agree more. Look, I had the privilege of meeting a lot of journalists this weekend. I don't know if that's a good thing or bad thing when I'm on my weekend, but a lot of them are the mainstream Westminster bubble type journalists, and they all said pretty much the same thing. And then, funnily enough, from both sides of the political spectrum. And this is their words off the record, not mine. That Starmer would be toast now if there was a credible alternative. There doesn't appear to be a credible alternative at the moment. Let's go through this again, as you mentioned. You've got you've got Burnham, who can't stand, which might have been a bit of a mistake on the Prime Minister's part, because Denton and Gorton looks a little bit like a very interesting by-election anyway. So you've got that. So you've also got the other officer, Wes Streeting, tarnished, as you've been saying for a long time, by his association with Peter Mandelson. And as far as the former Deputy Prime Minister is concerned, well, at some stage she will sort out her tax affairs, but that's not a great premise to lead the country. So then we look at Pat McFadden, then we look at potentially Miliband as well. Neither are seen as strong candidates to lead the country at the moment as well. So the feeling is, and plus with the Gordon Brown intervention, which a lot of people are drawing attention to, that at the moment it's given him a stay of execution. Now, if they lose Denton and Gorton and they have a bad set of elections in May, either of those events could be the touch paper for someone coming forward as well. But it's only a less perilous situation for the Prime Minister, because there's no alternative at the moment. You can cut the head off the Gorgon, but if you don't replace it with something, you have a flailing party.
Yeah, maybe that does bite him some time, as you mentioned there, who's going to be the next candidate. We've ruled out a few. The stamp duty for Angela Rayner is going to cause a problem. Andy Burnham, we know, is blocked. Wes Streeting, his previous associations could get him into some hot water, but maybe that dies down for him. That's what I'm hearing, maybe Wes Streeting. But again, we're going to have those two key tests. It's going to be the by-election in February, then the local May election. So those are the key tests for Starmer coming up. Maybe this bites him some time. We know he was vulnerable, though, before this when it came to his policies as well. And with the welfare reforms he tried to get through, the scrapping of the two-child benefit cap. So I think it'll be interesting to see if we get some kind of a clear leadership challenge. Maybe this does bite him some time, but we'll have to see. I think it's also really interesting, though, just an extra point that I was watching some interviews, and they're talking about this comparison that we saw even with Liz Truss when she got rid of Kwasi Kwarteng. Even though he kind of took the downfall for her, it really exposed her weakness throughout this, because it kind of became ultimately clear that they were very much in lockstep. That's kind of the risk here we're seeing for Keir Starmer. And I think also, even though maybe it bides him some time, we're going to get the publishing of those correspondence. Maybe that fuels up the fire. Maybe that makes this happen a lot quicker. Who knows?
I just had a thought. The list of names you went through, probably the most prominent one, or the one who had the most credentials, would have been Andy Burnham, blocked from standing, obviously, because he hasn't been allowed to stand in that by-election. I'd say blocked for now, Because what if you have a situation where maybe a Labour grandee, someone who is nearing the end of their parliamentary career, decides to step aside to force a by-election, because could Keir Starmer now be able to stop Andy Burnham
Show me
from
a safe
taking...
seat for a Labour grandee and I'll show you a route into Parliament for Burnham. Because you can imagine a Reform or a Conservative candidate standing aside just to scupper it. So you show me a grandee near the end of their term in Parliament who's got a safe enough seat to allow Burnham to come in and to see that one not end up with egg on its face.
Well, it would be a high-risk strategy.
I'm not saying it can't happen.
It would be a high-risk strategy. But I'm just wondering, like, with the machinations we've seen, the political kind of movements and all the whispers that must be going on.
It's time to reread Machiavelli as ever, because he always has the answers.
Well, it's worth highlighting, though, isn't it, given we've seen the bond market moves on Burnham before. So
Indeed.
If there were to be a route back, then that's when you could see some fever back in gilts again. Ridika, thank you very much. Coming up on the show, Unicredit posts a record-breaking year and hikes its profit outlook. We'll bring you our conversation with CEO Andrea Orcel. Plus, Bitcoin bounces back above $70,000 after a bumper sell-off last week. And with the software and tech sector still firmly in focus, we'll speak to Cisco's president and chief product officer about the company's AI plans. That conversation, 8:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
It was an eventful trading week last week in Europe. In the US markets, the wash up on the back of a whole bunch of company reports and fears of obsolescence in the software market saw the European markets actually have a bumpy trading week, although riding out the Friday session positive and banking gains across the course of the trading week. No mean feat as investors were pulling back in various quarters. Futures this morning were looking modestly upbeat, so much calmer picture as we look to get going for the Monday session. Across in Asia, a lot has been around the wash-up of the Japanese snap election and the Takaichi trade that is back on the Japanese stock market. You can see very strong, almost 4% to the upside, 56,363 on the Nikkei 225. So that trade leading the way. Elsewhere, you've got very strong gains too for the Chinese markets from Hong Kong to Shanghai, and the Kospi firmer 4.1%. But again, that snapback we saw in technology, it's multi-layered here that is impacting some of those Asian markets. And we saw it across in that Friday session on Wall Street. No doubt, a very big swing back for quarters of the market, well and truly beaten up on fears around first up on the software disruption that could be coming from the likes of Anthropic. And of course, some big chip players that were under pressure. In addition to later in the week when we saw the $200 billion spend from Amazon for its capex build out, that was just another death knell for the technology stocks. But by Friday, we saw the snapback at the Nasdaq up more than 2%. But it was the Dow actually that was one of the big performers, the diversification trade that was also carried forward. Banking names in the mix. We were through 50,000 on the handle on the Dow. To those banks, and you could see just how strong it was in terms of the rally, the highest since the inception of the banking ETF. And you can see as a result, these are some of the big names that were behind some of those gains. 6% up on Citi, 4% on Goldman Sachs to the upside. Now, the software Armageddon story that the markets had been focused on all last week, thanks to the Anthropic plugins. This is how we looked by the end of that trade on Friday. Snowflake clawing back some territory. The message was from a lot of these players that, look, you're not going to be reinventing the tools, that in fact the technology that we're getting through from the large language models from agentic AI will be folded into some of the software, making it better, and perhaps even those margins will still be strong. The rest of the stocks, Oracle, the other big one, of course, on the capex side, it's been a big investor, big software play, 4% to the upside. And to the chip stocks, this is how they also regrouped. And we saw a very strong rally in those names. If you take a look at the VanEck Semiconductor, that was incredibly strong, 5.4%, the size of the rally in the session Friday, but still weaker for the trading week, which just tells you how much territory was lost, down about 0.5% for the trading week. But the size of the gains, AMD again, that stock was down double digits at one point during the trading week, up 8% in the Friday session. Our US colleagues asked NVIDIA CEO Jensen Huang for his take on concerns around the spending side of hyperscalers and the AI build-out.
Demand is sky high, and there's a fundamental reason for that. We're in the once-in-a-generation infrastructure build-out. This is the largest infrastructure build-out in human history, and there's a fundamental reason for that. Artificial intelligence is going to fundamentally change how we compute everything. Everything from database processing, the way we do search, the way we do recommender systems, you shop, the way you watch movies.
Eric Hirsch is the co-CEO of Hamilton Lane. I just asked him, has he got as many leather jackets as Jensen Huang? Apparently not. Eric, good morning to you, sir.
It's one of my shortcomings.
It is definitely, well, there you go.
jackets.
There's something to address. Look, what an amazingly exciting week for journalists to look at the financial markets, especially technology. Not so much for investors.
I'm glad it's fun for somebody.
Well, yeah, I mean, gosh, it keeps us in business. But look, you specialise in private markets as well. And one thing that is the most obvious thing I'll say today is that whilst public markets, the oscillation and volatility is on display, it is beneath the surface in the same private markets. But is it creating wobbles in valuations in the private markets?
There's no question there'll be some valuation fallout because so much of this is a mark-to-market using public market comparables. So you're going to certainly see some wobbling, to use your word. That said, I think what's happened in the last 2 weeks has sort of shown, frankly, one of the major shortcomings of the public markets. It is a so reactive paint with a broad brush, and there's no room for nuance anymore. I think as we've moved into such an aggressive kind of passive-oriented model trading world, we've lost sort of the stock picking skill set of trying to distinguish between true winners and losers, and instead it has software in the name. That's a huge problem.
I would probably disagree with you, Eric, because on the public markets, I can find valuations from 5 times forward to 200 times forward. Yeah, we know a couple of the names at the top end there as well. Whereas in the private sector, I don't see much nuance in when I see the valuations of SpaceX, when I see the valuations of Anthropic, when I see the valuations of OpenAI, pretty much doubling every 6 to 12 months.
I agree with you there. And I think that is interestingly the part of the market that's not really fueled by private equity. That is the part of the market that right now is getting an enormous amount of hype from follow-on rounds of financing, opening up to retail investors and trying to continue to kind of compound that. I think if you look inside of the private markets, which is, again, most of those companies are tiny, not household names, there you certainly see a wide array of valuations, and I think that's exactly what you would expect. But I think there is a lot more nuance. I think what you're about to start seeing is the private markets are going to weigh in here and start taking a bunch of public companies private again.
I've got to say, I do agree with you on the stock picking side. And we were coming at it from our own perspective. I spent yesterday trying to look at co-work and how Anthropic's co-work technology would be folded in. And it's really hard to tell unless you get the subscription, you fold it in across your own existing software. You can't really see the capabilities. And I think that's the problem as we saw the wash up last week and the aggressive sell-off in software. Nobody really knew how it was going to hit because they haven't used the technology.
Agree. I mean, look at our own sector. The publicly listed private equity asset managers have gotten absolutely clobbered in the last couple of weeks, despite all of us basically coming through earnings seasons with double-digit growth. Why? There's this sort of, ethereal concern over private credit, and now there's the concern of private equity owns a lot of software, and the combo of that has weighed heavily on those stocks, despite, again, double-digit revenue asset management earning growth coming from the huge part of the sector. And yet those macro fears played down. So
here's a question. I asked it Friday and we couldn't get a response. So Anthropic is meant to be coming to the market this year. The IPO, well slated. But what you've seen has been destruction across the board in technology over the past week. Does that also impact Anthropic's valuation, even though it was the disruptor in the market that caused the carnage?
I think it's an interesting question because what you don't know right now is the market, I think, mostly is telling us that we expect it to be a total disruptor without being a partner. Whereas if you talk to a lot of the software businesses, they're saying it wasn't like we were oblivious to the fact that Anthropic existed or what they were doing. we're planning on sort of folding in pieces of that. This is the part where I feel like we're a little bit losing the nuance, which is the software business has the customer, has the install, has the trust, and is tied through the infrastructure of many cases large corporations who, as we know, don't love to rip a bunch of stuff out. If they can make that existing service offering better using AI tools and overlays, that's probably the better winner, as opposed to we're just going to start from scratch and everything's going to be a brand new AI bot. So is Anthropic going to be a disruptor? In some cases, I believe yes. And in some cases, it's going to be a client. And in some cases, it's going to be a partner.
That's what Jensen Huang was saying.
I'm missing the leather jacket, but we share the other things in common.
No, you split a berth. I just want to follow. I think there's an amazing line in your copy. The death of the exit markup, the hidden pop in private equity returns has evaporated. That is quite stark. Can you explain that to us?
So a couple of things. If you look back at the industry over the last couple of decades, what you see is private equity tended to be extremely conservative in their valuation practices. So we'd be holding it here, holding it, and then ultimately they would sell it. And so you'd see a huge spike between the last quarter holding value and the ultimate exit. That has gone away. Wow. Now, one thought is, well, it's gone away because the markets are terrible and everything's bad. I think what it really means is that the industry's gotten a lot better at actually valuing things to value as opposed to sandbagging valuations and then waiting for this big upside surprise. Yeah. But it does have ripple effect because in many cases investors were always kind of banking on that upside surprise, the secondary market banking on that upside surprise. It's gone away. I think net it's healthier for the industry. We should be marking to market, not marking to, oh, this is pretty low, and then look at my big surprise to you. So I think generally healthy, but it is a factor.
Great. And Eric, given the big story from Japan and that election victory and the stonking majority, supermajority the Prime Minister now has, it makes Japan far more interesting to investors than it has for a long time. What effect do you think that's going to have on the private credit markets?
So I think it's going to have a big impact on the private equity market in Japan. So if you look at that country as a sort of GDP and then compare that to just overall private equity volume, high GDP, relatively low private equity volume. Over the last year, you've seen that trade begin to come on, no different than you've seen it in the public markets, where you're starting to see a lot more investment going into that country. Frankly, that victory is telling us very clearly the alignment between Japan and the US is going to get very, very strong around things like manufacturing and sharing of resources. I think you're going to see a lot of US-based private equity firms deploying a lot of capital into Japanese equities through the private sector.
No.
Sorry, Karen.
Eric, before we let you go, there was a story in the FT yesterday talking about the IPO period, that it's been effectively sped up. There's an accelerator push now trying to get this happening in a very small window on the book building days. What does that suggest to you? Does it suggest a sense of nervousness that there's a louver rather than a bay window for IPOs now?
I think there's a nervousness. I think the window is sort of there. People are not sure how long it's going to last. Part of this, again, is we're in an incredibly volatile U.S. market, politically speaking. And so one more tweet, one more comment, one more whatever, and then the market can continue to turn or shut off. So I think there is going to be a huge rush through what might be a relatively short but open window.
I was just going to put in, but unfortunately, hang on, just give me 2 seconds.
We have time. We can talk about all kinds of other things.
We'll do some leather jacket shopping, yeah.
Exactly.
It was. You know what? I was actually putting it in. And
he's ordering leathers right here.
How many, I put into a well-known search engine, how many leather jackets does Jensen Huang own?
Oof.
Come on, let's all have a guess. You're not allowed to look at my screen.
Okay,
by the way,
I'm not looking. I'm not cheating.
Right.
I would say he wears one basically every time he appears. So maybe
has a large collection of his signature.
A large
leather
collection.
Jackets. One source indicate. This is one source.
I'm ready.
2 dozen.
I'm going to go 50.
His wife
I'm going to go 117.
Multiple, how many?
117.
Well, apparently, this is one source, okay? Total count 50 to 60 leather jackets.
Oh, well, I was close.
I mean,
that's very good. No, you were on. You said 50. His wife bought multiple similar jackets to avoid shopping for him after discovering he only found specific styles comfortable, resulting in consistent, minimalist, and often Tom Ford branded wardrobe. There you go.
But if you're acknowledging owning that many, it probably means you own at least twice that many.
But then there's well,
you're bringing your 117 number back into the equation.
Well, we don't know. I mean, again, it's a well-known search engine using one source. Eric, you need to get your act together.
I'm going to be back next time with a leather jacket.
I have a very nice black leather jacket, but I wore it once for an evening out, and someone on the tube platform just randomly said, "Oh, I didn't realise they were making a reboot of Grease," and it put me off wearing it ever since.
As well. Eric Hirsch, thank you very much indeed, style guru and also co-CEO of Hamilton Lane.